anything in the Southeast U.S. is being elevated because of the population and migration coming out of Boston, New York, D.C., Ohio. There's a lot of cold markets that the population is pouring its way down to the Southeast. A lot of it's not making it all the way to Florida. It's making it to the Carolinas and Atlanta, specifically in Georgia. But we're starting to see a different pattern happen now, and that is that the major markets in the Southeast, which are getting slightly saturated by investors, Atlanta, Charlotte, Tampa, Orlando, Jacksonville, Nashville, Dallas, Houston, those markets are a bit saturated. And guess what's happening? The secondary and tertiary markets are starting to show up and become very popular. We're representing investors who are making purchases right now in Huntsville, Alabama, and Columbia, South Carolina, and Gainesville, Florida. All these places that were not major dollar destinations for investors in the last 10 years are becoming that way because a lot of the same fundamentals exist.
Now, how far from, is this like in the DC metro suburbs or anything?
We're probably about 12 miles from Baltimore, about 15 to 20 miles from Washington, D.C., so it's a very strategic location.
Right in between the two cities. I love that. Baltimore, people don't recognize Baltimore as being as great of an investment market as it is because the headlines on Baltimore are almost always negative. But Baltimore anchors D.C. to the north. So what happens is you got a major metro, and then you got like a mega metro in DC, and then you have a major metro just an hour or whatever north of it. Everything in between is in play. And so being right in between is great because you've got the ability for workers to commute in both directions. And so you've got bedrock. And so let me show you this chart. There's only a few places in the country that actually have a chart like this where it went up, so big party, no hangover. DC does that, Charleston, South Carolina does that, and the averages are really impressive. Nationally, the average home in America appreciated 3.44% per year for the last 20 years. The state of Maryland, 5.22, which is a substantial increase. But look at this. The county of Howard, 6.42. That is one of the best appreciation rates in America. All right, so you're a genius. And I would, listen, at the end of the day, if you could accumulate more, I don't think, if this market did this over the last 10 or 12 years, it's hard to imagine anything on the horizon that would take it down, right? If it was going to get taken down, it would have gotten taken down back here. It didn't get taken down, and then again, look at the seasonality. You've got, and it went from 408 in July of 2016 down to 347, so a $50,000 swing, back up again, back down again. So this is, definitely, if it were me, I would bide my time. Take my time, do my research on what blocks I want to invest in, what parts of town. I look for anything that I can find that, okay, now I found a winning market. Is there, I get greedy when it comes to, 6.42% appreciation rate. It's almost silly to get more greedy than that. But can you find a part of town that's gentrifying? Can you find a part of town that just got a Starbucks walkable? I don't know. Find some other little edge if you can. Take your time, get ready to pounce, make offers on 7 or 8 houses in the same weekend in November. Get the best deal you can, and you'll win.
Tim Peterson, considering buying a winter second home in Florida, a condo. Is it a good time to buy in Florida? If you're looking to hold it for a long time, yes. What's happening in Florida is that the market, this chart right here, was even more dramatic in Florida. Where are you thinking in Florida, by the way, Tim? Give me another bit of info there. It was even more dramatic. The market shot up. It shot up so hard that it came down very hard, but it's fully recovered right now. And here's an analogy I love, right? Two forces of nature, a forest fire and a glacier, okay? The forest fire seems like the most forceful, powerful force of nature you could ever come across if you're close to it, right? It's raging, it's violent, it's terrible, right? But if those two things met in battle, a glacier trudging along slow and steady, and a forest fire, who wins that battle? The glacier wins the battle every single time, right? There's no contest. The glacier for the Florida real estate market is the population migration out of the more expensive, colder climates in the Northeast and upper Midwest coming down to Florida. That hasn't changed. Cost of living is better, quality of life is better, no state income tax. That's the reason why Florida now officially has more electoral votes than New York. Okay, that didn't change. What the forest fire was too much speculation during the housing boom that it had to get put out by the glacier. It has been put out by the glacier. So you're mentioning Sarasota. I know the west coast of Florida real well. I grew up going to Sanibel Island, just south of Sarasota. I had my honeymoon down there. My mom lives down there now. That market is great. It's absolutely great. Just don't flip properties there. Okay, buy them and hang on to them. Don't get mad at me, Charlotte people. I live right here. We're going to be here for a long time. Columbia is like the next southeast city to go the way of Charlotte and go the way of Atlanta long term. Population story tells the same story, right? Can't deny it. Job diversity heavy on government, but a key point here is the government of South Carolina is based in Columbia. It's the state capital. If I see government number one, I get nervous unless it's a state capital, and I'm especially not nervous when the state is a red state, meaning red states are stingy. They usually run a surplus. They don't spend all the tax money and then some. The red states tend to be less underwater, so the red state capitals are less vulnerable to new government coming in and slashing jobs, okay, and hurting the ecosystem around that government entity. So I like state capitals of red states especially, and that's Columbia. What about this? Oklahoma City is the next Dallas. Those of you in Dallas know that your city has been a shining star of inbound job growth. It's unbelievable. It's reflected in this chart. Prices were pretty stable for a long time and then out of control. So your cost of living factor is not quite as low as it used to be. Businesses are thinking, where can we go? It's kind of like Dallas, has a lot of the same fundamentals as Dallas, has a lot of the same cultural underpinnings as Dallas, but it hasn't matured yet. That would be, in my opinion, Oklahoma City. Oklahoma City, stable as can be. Where's the housing boom and housing bust on this green line? Don't even see it. What does that tell me about Oklahoma City? Doesn't fall for trends. I had somebody, and it was actually a Texan who told me this. I said, well, why did California go crazy and Texas didn't even blip the chart? And the guy told me, the last fashion trend to take hold in Texas was jeans and boots. So that gives you some idea of how quick we fall for fads, right? It's like, yes, what an awesome answer. I think Oklahoma City is going to see a precipitous rise. It's held to the national average, 4%, 4.2%. Dallas has done 6.3. I think Oklahoma City is going to move the same kind of way Dallas did for the same reasons. And that's the point. Population growth, right? It's tracking above the state of Oklahoma, and it's even a little bit steeper than Dallas. But look how similar it is. Again, a little blip here and then a crest, blip here and then a crest. Undeniable data visualization similarities. And the job situation also, I won't bore you. You go into it in depth, and it's also very similar.